Everett. I worked in corporate actions for 2.5 years with Morgan Stanley. But I was a part of payment processing. We used to initiate payment, release payment, stock breaks, cash break, claim processing part, your event setup process also. We were taking care of at the time, and it was a very interesting one. Means we actually used to release payments to the different banks and all right. But here in fund accounting, you don't need to release any payment at all. Basically, you receive payments, so we just review the payment notices, or we receive the instructions. We just review and update the impact. Means impact on portfolios in the books of accounts. That's how you basically corporate action works in hedge fund and private equity, or as well as in your means other fund accounting pools, including your private equity or SPVs and all. All right. So let me quickly walk you through the partner transfer. Actually, I'll draw something quickly. So through AI will generate the fund. You can also note down how it, your means partner transfer works. All right. Let's take example. We have ABC main fund. Okay. So we have ABC main fund. That main fund has few different classes. ABC A, right? Fund. Then to ABC B fund, then 3 ABC C ABC let to ABC C ABC A fund, ABC B fund, and ABC C fund. So under, let's say, ABC's A fund, there are A, investor A, investor A, and investor B. And under this fund as well, there are investor C and investor Z. Under C fund, investor D and investor E. D and E. Let me generate graph, see how it looks like. Interesting. We have a structure now. Can you see this? Yes, no?
Yes.
All right. So ABC main fund has a different other sub funds, I would say. All right. ABC A fund, ABC B fund, ABC C fund. And the most important part is under ABC fund, we have a and B investor. Under ABC B fund, we have a C and a Z investor. And under ABC fund C, we have a D investor and E investor. Again, the important here, it could be your investments, or let's say the percentage. Let's say investment is USD, so which would be your 100%, right? And unrealized or realized gain and loss, if it is there any. Let's take a hypothetical situation, 2000 USD. So this will, I'll just create for all investors. . And we are considering all investments. Investors had invested equal amounts, all right, in your fund. This is very practical, case, and you can means you will come across with such a cases while preparing your fund flow statement, your individual, fund flow statement, your balance sheet of a fund, because this will directly impact on capital of that particular fund, right? So we'll have to report each and every partner transfer in the books of fund, and we should ensure the date, amount, and percentage of transfer which is correctly reported. If you see any, let's say, wrongly, if you have, let's say, reported out, which will directly impact on your financial statements. How? We'll see that. So now if you see under ABCA fund, we have two investors and they have contributed 10K USD balance. So it means total capital is 20K, and unrealized gain of fund is 2,000 each. It means 4,000. So total value of your fund is 24,000K, means USD basically I'm talking about. All right. Now, if I talk about the partner transfer, see the situation, it could be assumption. Again, I'm talking about assumptions. Let's say uh you know this investment, it was in a stocks, right? Let's say this investment, it was in bonds, and this investment, stocks, bonds, and let's say startup funding. Startup funding. All right. And NAV of the fund, it could be different for each class. So it depends. But now on the basis of this data, if you ask me, sir, what is the NAV of each series or each fund, you can compute it. We don't have any liability. So whatever the value is, just, your combined value here in this case, your NAV of the fund is 24K, right? And if you want to compute NAV for per shares, you can compute it directly. Yeah, just number of units decided. Let's say we have 100 units, right? So if it is a unit, because in a hedge fund, you can see in a unit. So I'm just assuming we have 100 units for each scheme, and just divide it, NAV for per share. This will be for across all the series, because we have same example. Just you divide it, 24K divided by 100 units is equal to your NAV for per shares. So I believe it would be around 2,240. Am I right? You can also compute it. Let me just divide 24,000 divided by 100, which is 240. So 240, which is the NAV for per series. All right. We have a same number. So across series, you can see or funds, you can see the same number of NAV. Okay. But now the condition is B investor is an unhappy with the fund performance, or maybe let's say B investor is looking for the another perspective is B investor is looking for investment into startup, because startups investment is a highly risky one, but it offers handsome returns as well. But this guy is ready to invest. And in the same way, let's say e-investor is ready. E-investor is ready to invest in a ABC fund, right? This is another situation. But what if, sir, B investor is ready to, let's say, invest in ABC fund, but E investor is not ready to invest in ABC fund? That's fine. Partner transfer, it means ultimately each investor, like A investor, B investor, C, Z, D, E, all investors will treat them as an limited partners, and that all limited partners, they want to switch their fund due to maybe investment preferences, due to maybe expenses of a fund, due to maybe tax treatment, or due to maybe because they want the other asset class which fit to their investment objectives. All right, so they can simply request to the funds to allow partner transfer, right? To allow partner transfer. So through side letter, they can notify to the fund managers, look, my current investment, which is into the ABC fund, and current value of my portfolio or investment is, let's say, 12K, including unrealized gain. If someone is ready to, let's say, purchase my stake, or someone is, let's say, or if someone is not ready, then you can simply, what you can do, you can liquidate my investments and accept my nomination in other funds. It could be ABC B fund or ABC C fund, right? Let's assume it, if B investor want to invest his stake in ABC fund, then you can see it looks like this. Oops. We have E investor, and here I believe it's a B investor, and his wealth that you can transfer it out. Look at this. All right, and if this transfer happened, so all transfer related information, it should book in the fund accounting system. So it means you can remove partner's name, like B partners position, name, unrealized gain, everything from the balance sheet or your fund flow statement, and from all the records, and that all records you can transfer it to the ABC fund. And here, if you see, once you add the the another partners, right, to the ABC fund, your balance sheet size will automatically it will change. So it means total assets of the fund, it will increase, not NAV for per share. Then your inflow of cash under ABC fund, it will again increase. So it means it will impact on cash flow statement of a fund. All right, and total gross assets value as well as total net assets value, it will impact. So it means your balance sheet assets and even capital position will change under ABC fund. And on other hand, total assets will reduce, even total capital also it will reduce of ABC A fund. All right, so it means you can see like fund outflow from the ABC fund book. So this is how basically partners transfer work in hedge fund business. Same logic you can even apply in a private equity business as well. But in a private equity, here the one change which you can see, there won't be any units in a private equity. So we'll have to transfer like partnership interest in a percentage. It could be 10%, 20%, 50%, or 100% of total value of investments. current market value of investments. So that partnership interest, which we can transfer from one fund to another fund. All right. And this is something very critical, because sometime what happened, let's say if you're preparing financial statements and already that partners confirmed before our final closing of quarter, they have confirmed it that partner B want to transfer the or invest in ABC fund. The all the background work, it was already done, but as accountant we forgot to update the records in the books of A as well as in the books of C. So it means it will produce incorrect NAV package, including your fund flow statement, balance sheet, your other financial statements and all which are associated with it, including your highlights of uh, your financial statements, everything it will produce incorrectly. And even this will also impact on taxes as well. All right. So this was all about partner transfer. So partner transfer is allowed within that particular, the given period. And throughout that, they can easily, I mean, you can book the partners in the respective books, and which is important, because if you miss to book any partner transfer, it will directly impact on your financial positions of a business or fund, especially. So any question with regards to this, you can unmute and ask.
Yeah, Shivraj. Like, what is the benefit of like choosing instead of going for the redemption and a subscription in a ABC fund, transfer from the partner transfer? How it will be beneficiary?
Redemption, which is something you can schedule it maybe after 2 years, 3 years, 4 years, right? Let's say you have subscribed investment in one fund and your fund has been locked for 5 years. So it means you cannot redeem your investments before your maturity of investments, correct? But what if, let's say, your A fund has produced 10% return or 20% return, and on the other hand, your ABCC fund produce, let's say, 50% returns. So don't you think that you should look for a the different asset class where it can offer good amount of returns? But again, that depends on your, as an investor, it depends on your I would say depends on your risk as well, right? Basically, transfer of partnership interest from one fund to another fund, which offers flexibility to the investor to change the assets class on the basis of investment objectives, right? Initially, maybe let's say you don't wanted a risk, so you decided to invest in bonds or bonds related investments or series. But when you invest in bonds, you can see the very stagnant kind of returns. You cannot expect any capital appreciation. You cannot expect any you know income apart from fixed interest payment. All right. But in a stocks, you can see all of that. So depends on, basically, see, this partner transfer, it offers flexibility to the investors. So you all can change the classes from one to another, and that depends on the your investment objectives and risk parameter, I would say. And apart from that, you can also sell it out your stake to the external investor as well. So you might see question around, hey, have you worked on partner transfer? And now let me ask you a question. Is it something, let's say there is one XYZ fund, and from that fund, the investor is ready to join this ABC fund. So can we allow them? If that provision is let's say already stated in the your LPA agreement, if the term is already stated in the LPA agreement that the external partners are also allowed to invest, then you can do it. If not, then within your entity, legal entity, it will allow to change, or it will allow to join different series. But this will something kind of, they'll open at once in a year, maybe once in a quarter. During that period only, the investors, they can take a decisions.
So it is kind of internal transfer between two funds.
Yeah. But external investors also can, join, right? For example, let's say Nishikant, let's say Nishant or Nishikant. Anyways, you had joined this ABC fund, and I was in ABC fund, and we are like both, good friends. And now just, we met in cafe, coffee, and we just spoke about our investment. Hey, look, I also invested in ABC fund, but I'm in, ABC C series, and my series offered 15 or 16%, or 60% returns, and which is a good one, and we're expecting more. Then what we can do, we can, means what you can do, you can talk to your fund manager. Hey, look, whatever my current interest is, earned or there, so can you please transfer all of that to the C series or C, different series, because I'm looking for now the high amount of returns, because my risk appetite is also high. So you can do that. So it means this is what we'll call it as an internal transfer. But if someone is, let's say, the other investors from, apart from this, your other means investment group, if that investor is also really interested to join your group, and if that provision is already, let's say, defined in LP agreement, then you can allow that investor as well to join your group. So this is what your equalization also come into picture, guys, in short. Because equalization and partner transfer, which is something when someone joined your group, then only your equalization come into picture. Otherwise, why equalization come into picture? So because of your partner transfer only, we have equalization. So it means equally, then you can allocate the interest and everything, and you can re-evaluate your portfolio or rebalance your portfolio, in short, I would say. All right.
Yeah, sure. If it's in the open-ended fund, still like the existing investors like is not ready to accept the like third person, other investor or partner. So still they can like
In an
whatever the part.
open-ended fund, you don't need to then execute any proper transfer, because they'll directly, means if the scheme is open, then means anyone can, participate and buy and sell the units. Your job is like to whatever request you receive, you just need to book it in the fund book, accounting book. That's all. But for a closed funds, you will have to properly execute partner transfer. For most of the open-ended fund, your transfer agency, they take care of it. But for close-ended funds or for private equity funds, SPV funds, you will have to manually execute it, because they don't appoint any transfer agency. Sagar, I believe you got the answer of your question. Like you had asked, maybe, a few weeks back or 1 months back, question about transfer agency stuff. Am I right?
Yeah.
Why mutual fund appoint transfer agents? So transfer agent, basically, it's an agent who take care of, the subscription and redemption request details. If someone, let's say, subscribe units in XYZ funds, and if, let's say, BNY is the transfer agents of that particular fund, so it means BNY accounting team, they received subscription request from the AB or whatever, the investors you have, and on the other hand, BNY also receives the redemption request as well. So basically, they just transfer units from one account to another account. So, sir, why transfer agents? The important, because that, because of transfer agents only, fund can maintain, liquidity. The reason is, as a fund manager, if I receive, let's say, high amount of subscriptions only, it will very tough, for me as well to deploy that fund, right? Because to invest funds, it's not an easy job. Second thing, let's say on other hand, if I receive, let's say, huge redemptions, and on other hand, we don't have any subscription request, again, high amount of redemptions would, to manage high amount of redemptions would be very tough for me. So I'll have to invest as a fund manager. I'll have to, let's say, liquidate my investments, maybe on a discounted rate, and then I'll have to schedule a payment transfers and everything. So it might impact on a fund's performance. So to control that, we need a transfer agents who can control your supply of a fund, and who can also, facilitate in a way that only minimal impact would be on funds operations, investment operations, basically. So your transfer agents basically, they just transfer the investments from one investment's account or one investor accounts to the other investor's account. They just check the KYC details, investment details, wire payment details, and they just transfer investments from one account to another accounts, and they book it, and same report they produce and send it to the fund accounting team, and accounting team, they take care of it. But in a private equity, fund accountants only, they, book the transfers, or fund managers also, they can book the transfers, or any experts, they can, take care of it, and that all of that activities. Same applies for a close and uh, hedge funds basically. So they take care of it. That part means accounting team only, they take care of it. But maybe let's say you are working with XYZ organization, then they are not working on transfer. So that doesn't mean that transfer that never happened in that process. Yes, it happened, but you're not taking care of it. Maybe your fund management team, they are taking care of it. All right.
So switching is also having the same concept, like switch on, switch off. So we used to get.
Yes, switch on and switch off in terms of subscription and redemption, which works in a different way. Switch on, it means that investment now, which is ready to accept new investments in the fund, that facility will call it as a now fund is switch on the subscription request or redemption request. So during that period only, maybe they can, announce the switch on period for 1 week, 2 weeks, once in a quarter or once in a year. So you can submit the request. So fund will, accept the redemptions and subscriptions, and they'll redeem or, process your subscription and redemption accordingly. Same for a switch off as well. Switch off, it means, let's say now they have switched off the new subscription and redemption request. So it means they have closed their that particular closing. So you cannot now send subscription and redemptions until they switch on the fund. So this is something, again, you can call it as a switch and switch off. But again, the switch in and switch off basically, which you can relate with the transfer of funds. So when you switch on the funds, then only you can see the transfers. When you switch off, there won't be any transfers as such, right?
Yeah.
Any other question, guys? Come on. Am I clear enough? या समझा नहीं समझा? English में समझ में नहीं आया, so I'll brief you in Hindi as well, but not much. Only for 30 seconds or 1 minute. क्योंकि हिंदी में मुझे ज़्यादा explain करने नहीं आता ये सब चीज़ें. All right. So it's a very easy thing because it depends on your preferences and all. But important is from accounting perspective, which is something, the impact on financial statements and all. And as I already said, your balance sheets, income statement, and fund flow statement, it will impact. And if you produce any reports which are associated with it, it could be investors statement, that also, it will impact. Your cash statement also, it will impact. Group ledger, your entries also, it will, means impact. So even trial balance also, it will reflect incorrect balances. So make sure that you have booked the transfers, whatever request that you have received. Apart from this, one more term which I want to explain to you, which is suspension of a fund or suspension of operations of a fund. Suspension, it means, for example, let's say this series, if I want to suspend. Now your question would be, sir, why someone will suspend this? What could be the reason? See, suspension in terms of, let's say, if I received high redemptions, right? And if the fund has no liquidity, then fund can suspend the operations. In case of high redemptions, okay? Second thing is, let's say, for example, we have invested in a securities where that security which is went on a bankruptcy. That doesn't make any sense to keep that scheme open. So I'll have to suspend fund or operations. All right. Second thing, due to sometime what happened, let's say regulatory issues where regulator enforce some restrictions on fund operations. In that case also, fund can suspend the operations. So during the suspension period, again, it's very critical. Listen this very carefully. During the suspension period, suspension, it can't be like permanent. Suspension, it could be for 1 week, 1 month, 1 year, or maybe for depends on the that the issue or matter or event or restructuring, I would say. So during that suspension period, fund will not entertain any subscription and redemptions, right? Why suspension will happen? Because, as I said, because let's say high redemptions, maybe due to some regulatory issues, due to liquidity issues, fund can impose suspension of a fund's operations. But that doesn't mean he will not produce any NAV and all. He will do it everything. Background or back-end operations, it will not impact as such. Investing operations, it will impact it. So fund manager cannot raise new investments on the same scheme. Fund manager cannot utilize that cash because cash is restricted as per regulatory norms. Then maybe fund has a, let's say, higher amount of liabilities on the fund's head, and their assets value is now very minimal or low in the fund. In that case, also your fund will be restricted. And sometime even regulator can also take the control for auditing purpose. So during that period, we cannot entertain any kind of subscription activities. So I hope now you guys clear on this part. All right, guys, fund suspension. Oops. Fund suspension. So I'm done with your transfer of a funds concept. Note down it in your notebook. And second one is transfer of a funds. Okay. So if I summarize what we have covered so far, means considering that several sessions and all, we have covered journal entries for different heads under your fund accounting. You can see different heads, like for example, let's say, and then we'll jump on corporate actions. So let me just brief about the different heads under fund, the activities which you can see, which is cap stock activity, right? For subscription and redemption. Then second one is your trade processing and settlement of securities. Third one is income processing. Income processing for dividend and interest or any kind of other income. It could be lease, it could be commission. All right. For example, let's say in Sharia finance or accounting terms, we cannot charge interest payment. So basically, they'll call it as a halal, or there would be muraba and all other terms which you can see, basically, which is a discount and lease kind of things you can say, or rental kind of things, which you can say, right? So that type of income also, we report it out in the fund business. So that comes under income processing. Then your corporate actions come into picture. Right, different types of corporate act.
What I want to ask is,
You can ask.
the trade processing part and settlement, that I understood, that securities are bought and sold, and that processing has to be done. But during my work experience, I came across a terminology that corporate action trades also have to be settled. So what exactly is that?
Yeah, we'll discuss that. So I mean, corporate action, anyways, we're going to touch it today. So we'll discuss that. Settlement, it means nothing but, see, during the corporate action process, what happened? Company actually remove holdings from your demat account. So there won't be any basically securities as such, right? So there would be system called, it means, it could be your custodian, it could be your depositories who book the securities or actually transfer the securities in your demat account. So that process, will call it as a uh, processing of corporate actions. So it means actually your bonus issues will transfer to your demat account, then only you can perform the valuation of securities, right? Otherwise, how will you perform the valuation? For example, let's say company announce bonus issues, so that bonus securities will actually settle in your demat account. So until then you cannot evaluate the price of your securities. So we just waited to see how that particular trades settled, and once they settled, it means we refer the demat account, and same transaction we book it in accounting system. See, in a finance system, we have a different systems like IBOR, investment books of record, where investment and custodian or broker, they maintain it. Then ABOR, which is investment books of record, sorry, accounting books of record. Mutual fund, hedge fund, and private equity books, basically they maintain it. There are TBOR as well, like trade books of record. So it means broker specially maintain it only for a trading purpose. So we have a different books and they maintain it. So when we say booking, it means actually we'll have to create a records in accounting system and adjust the pricing. So that process, will call it as a booking of corporate action or settling of corporate action in the books of demat account. And then only after you can run your corporate action check and cross verify details and produce final your assets or total assets value or net assets value, I would say.
So once it is settled either by buy or sell or corporate action, after it is settled, then only the accounting part begins.
Yeah. Otherwise, how will you do it? You need a exposure of that trade, correct? You need a
Yes.
exposure, right? Without
Mhm.
exposure, how will you do it? You need exposure of a trade. Financial statements, which includes journal entries, ZL, then trial balance, DS, IS, and
Sura, sorry, here you mentioned like the exposure. Exposure in the means like is it tax like advanced taxes which need to be calculated or something?
exposure, it means value. Value of
Okay.
value. All right. Final closing. Right. And the final closing or uh, investor transfer or other activities which you can see. Let me just generate the graph. Let's see how it looks like, so that it will help you to understand your fund business and activities. Let me see in different way. Oops. Only one way. Oops. Yeah. So corporate action. Okay. So this is how your fund operation looks like, guys. So main fund can have a different activities. Cap stock, it means, which is for a subscription and redemptions. Whatever subscription in a fund received, we book it in the system, and we have discussed the journal entries as well. Then second one is trade processing, basically. So when we say trade processing, it means, because when fund received subscriptions, fund invest that money to purchase securities from the open market. It could be, let's say, equities, bonds, money market instruments. It could be trade finance instruments, trade bills, or the other, the discounted bills and all, or corporate deposits, schemes where fund can invest into this, right? Then income processing, it means basically whenever fund earned or generate any income on financial, let's say, activities, that income we need to book in the hedge fund or private equity or mutual fund book. And then corporate actions. Your corporate action, basically, because when we invest in equities, bonds, preference equities. So you will see, the actions, because as a company, we invest in equity. That means when company announces dividends, any stock split, bonus issues, dividend reinvestment plans, cash and stock, the events. So all that events, as an accountant, we need to reconcile the cash or positions or holdings, and again we need to compare the pre-corporate action and post-corporate action value difference. So I'll take the couple of examples which you can understand it, right? And the valuation, it means the existing students, who have attended my valuation session, like uh, valuation for valuations for level 1, level 2, and level 3, right? Securities, which already we have covered, all right, and fair value adjustments and mark to market. So the same session, I'll share it in the group. You guys can go through it. But again, for new students, I'll cover it that portion as well, valuation part, because we have a new folks as well. And the expenses we have discussed all different types of expenses in the private equity session. Same session also, if you can refer it in a under hedge fund also. So I mean, see, the expenses are expenses. Only the difference which you can see in a private equity, like the expenses, it means we'll call it as cap call expenses or distribution expenses. So you can just categorize the expenses. But in a hedge fund, same expenses you can categorize in a way like subscription based expenses and redemption based expenses. So what it means, so at the time of subscription only, you can ask investors to process the extra subscription value to manage the expenses. All right. Same that we have seen in private equity as well. At the time of capital call, you can ask investors to, pay the higher amount than the capital call amount, so that excess amount fund manager can utilize for a fund expenses. All right. Same terminology you can see in hedge fund as well. And finally, like your financial statements, which includes lots of transactions and all, and that also will call it as a NAV package as well. So it means which includes all different statements and all. And then your final closing of a fund, which includes your transfers and lots of other activities which comes into picture.
Uh, One thing that I want to ask is that in this entire flow that you have mentioned, like income part and the expense part also. So out of that, whatever is realized for that, there are cash teams also.
Which
That
one?
there are cash teams also involved in this. The ones who actually record the cash that is coming in and cash that is going out.
Your accounting team can manage it. You can see treasury management, but the custodian basically, provide that facility, cash management and all. But at a fund level, you don't need to maintain any cash team. So instead of that, what you can have any, maybe CFO team, chief finance controller team, who can take care of the cash or other expenses and all, and they can track it as well. But at a custodian level, you can offer that cash management service to the fund businesses. They need it to process the wire, to release the wire, so they need it. So maybe you can see those teams in the custodial business line, but not needed in means at the fund level, you don't require any cash team and all.
Mhm.
Did you get this clarity, or still need a?
Yeah, got it.
Because see, maybe you would have heard this in your State Street. Why? Because they are a bank and they provide that service only. They
Yeah,
provide.
because State Street is a fund administrator as well as custodian.
Yeah, they have a service. They have lots of services. So this is how your flow looks like. And even if you join anywhere as a BA, so they'll ask you to design flow like this by using different different applications. So this flow, you can note it down. Your flow, it works like cap stock, trade processing, income processing, corporate actions, valuations, expenses, financial statements, journal entry, group ledger, trial balance, BS. And we have discussed that in my previous session, how it looks like financial statements and all. Final closing, it means if you have any investor transfers, and also we need to book it before production of your final NAV and all, so that we need to include in the financial statements basically. So this is your flow of all funds, including mutual funds, hedge funds, private equity funds, crypto funds, or different funds. If you want to note it down in your notebook, please do so. You might see this particular page is not shareable. Otherwise, I don't mind to share with you guys.
This is open source, Shivraj, this xlidraw.com.
Yeah, it's an open source, but when you try to share it, they'll ask you for a subscription.
Okay.
I haven't logged in. Even I don't have any problem to subscribe it. But the point is like my all international transactions are now off due to some fraudulent activity happened in my account. I have blocked all my transactions. Yeah. All right. So just note it down this flow quickly, and we'll then go ahead with further part. Quickly, just do it if you can. And if you're done, just text me in the chat. Yeah, we are done. We are good to go ahead. Quick charge. वहीं पे था. So are you guys done? Can we go ahead? Come on. I need acknowledgement. चलो. One genuine question to everyone. समझ में तो आती है चीजें या फिर बाउंस हो जाता है पूरा? Guys, can you hear me? Speak for yourself. Don't wait for others, like someone will speak
Yes,
for
yes.
you.
Yes, we can understand what you're teaching.
Okay. बिकॉज मेरा पढ़ाने का तरीका थोड़ा सा अलग है. मैं ज्यादातर पर टेक्नोलॉजी वगैरह इन सबको एक्सेस करके आई ट्राई टू, मतलब जो भी चीजें विजुअलाइज अच्छे से करे तो वो दिमाग में बैठ जाता है, फ्लो एंड एवरीथिंग. वो मैं कोशिश हमेशा करता हूँ. राइट. एनीवेज, if you're done with this, then we can move ahead. See, one more thing I just wanted to quickly explain. For example, let me see if I can, which is someone asked question me as well. We have, let's say, master fund, which is registered in BVI. Right. And then
Shivraj, what is mean by BVI?
it's a country name, British Virgin Island. And we have one onshore feeder fund, again registered in BVI, for BVI based investors. And we have offshore fund registered in US for foreign investors and for domestic investor. Taxable, tax exempted. Taxable. Is it taxable? Let it wait. Oh my God. Onshore domestic fund. Again, it's a taxable flow. We need a flow to explain quickly. It will take time, 1 minute or 2 minutes, but to flow that you can quickly, invest. Foreign investors. Oops, master feeder, but I need this kind of master fund. I need map feeder funds under master fund. Let's see how it designed. Master fund, master fund. Let it be. We have this, flow. All right. So master fund, which is registered in BVI, and that same master fund registered one offshore entity in US for foreign investors, and one entity like onshore feeder fund, registered in BVI for domestic investors, because domestic investors, they'll pay taxes as well. And of course, when you invite, the other onshore investors like foreign investors to invest in India also, so the Indian governments have designed, some different tax structures for foreign investors, right? And every country offers some, sort of benefits, guys. It's not something that we are offering, but the every country has some different laws for a different tax, treatments for foreign investors. All right. And but if we have a two different pools, so we can easily manage accounting and reporting, as well as we can automate certain tasks as well. So to automate that, we should have to have a different, structures in place. So one of the structure is like master fund. All right. So just to means understand, like master and feeder already I have explained it, but now how accounting works basically under master as well as feeder in terms of, let's say, when uh, when we want to, book any transaction in a feeder fund, but that feeder has some, sort of, let's say, cash balance. So to adjust that, how we apply the accounting treatment or how we book the transactions, will try to understand that process. And I'll also means we'll just, discuss couple of examples, or at least one example or two examples in this particular context. All right. So let's take a situation where cash balance, which is available as 100K USD, assets, liabilities, and capital. So capital would be your total of, assets, and balance sheet means it's a 2 lakh. Right. Cash, let's say it's a total cash received to the feeder is, let's take a hypothetical situation, 1,10,000 invested in master, basically 1 lakh, let's say, invested. So closing balance, which you can see, which is a 10K, and total NAV, TNA, which is 1,110. Same context we have under offshore fund as well. Oops, my bad. So 1,10,000, but so the change is, let's say, cash balance which is remaining is just 1K. The total TNA is is 1,01,000. So this is your fund, means current situation or structure, I would say. Your accountant and the total balance. Okay, so available is this one, and that feeder level, feeder has a different balances as well, so which is fine. All right. So master entity has incurred some expenses, or even feeder can also incur some expenses, and which is fine. So that doesn't mean only allocation it should be through master or it should be through feeder. Depends on the the type of expenses, what type of expenses that the fund is going to book in different funds. So that depends basically. So let's take a situation where feeder feeder offshore fund has received expenses of 5 USD. So this feeder offshore fund has received expenses of 500 5,000 USD. So now you tell me, you have a cash balance of only 1K. So how will you book the expenses? Come on. How will you book the expenses? Can anyone tell me? Any guess? I would like to hear any guess if anyone can, at least give a try. Under offshore fund in a US, offshore feeder fund has received invoice of 5,000 K USD, where fund has paid it, but only the 1K, means 1,000 USD cash balance is available. Then how this fund manager process $5,000 receipt or payment? Come on. How process it?
Maybe they will raise a request to the master fund.
Okay, one guess is master fund. Come on, other guys, quick.
Shiraz, can you repeat your question, because I had some internet issue, so that's why I didn't.
Offshore US fund has received expenses, payment. Received, it means paid it basically. So said, let me write in this way, has paid expenses of 5,000 USD. But so in reality, offshore fund has only 1,000 USD balance available. So how feeder fund, means offshore fund, has paid 5,000 USD payment?
The expenses will be paid by the master fund, because the feeder fund, like offshore fund, whatever the investor are investing in the master fund only, right?
No, anyone can pay. So forget that. It's a bullshit logic. I see only we believe that only master will do this. No, anyone can do it. It's feeder is also individual entity, or master is also individual entity. So they have a sovereignty. So they are like sovereign. It means they are individuals. So they can have their different expenses. So don't put a lot.
So 1,000 we will pay from the available balance, whatever we have, and 4,000 we will move it to PNL, I guess.
No.
Or we
Something
can take it
leverage.
as
One logic is will utilize from the 1,000 balance. We are good, with that. You can utilize that. But for a 4K, okay, let me put it in this way. You have a balance
4K, or we can.
feeder onshore fund, right? You have a 10K cash balance which is available under feeder fund, and The another thing is your master fund has also available balance is 100k USD, correct? 1 lakh USD or 100k USD. Am I right? Balance is available, right? Yes, no, come on, guys. See this
Yes, yes, yes.
balance. Sorry. This balance is available, right? If the balance is available, then why can't we, request to the master to provide liability to the this offshore fund? We can do it, right? Or this feeder fund can also request to the means offshore fund can request to the other feeder funds to pay the 4,000 as a credit to the offshore fund, maybe for 1 month, maybe for 1 year. So once this feeder offshore fund has, let's say, or will receive the fund, excess fund, then this fund can return that money back to the onshore fund. We can do this, correct? Yes, no? Come on, guys.
Yes, yes, we can
Yeah.
Right?
internal transfer. Yes.
Yes. So your internal transfer come into picture where you can book the accounting entries in a way. So just book it, note it down, this flow as well. You may expect questions around it. So you can book the journal entries in the books of account in a way like uh, 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 cash received from affiliate entity, which is your credit balance, sorry, debit balance, my bad. 4K, which you can, request, and debit would be payable to affiliate. Affiliate, it means concern entity, which is 4K. And again, it's a credit balance. Now, you can request payment from your feeder or master, depends. So it's your decision, basically. You can take that decision. And on other hand, we book the transaction in the books of this entity. Let's say we have decided to accept payment from feeder only. So in the other, feeder book, we'll book the entry receivable from the affiliate entity account debit to cash account credit. Cash disbursed account credit. Yes. You can check the spelling as well. And amount is okay. Now your another question would be, if we are treating this as a credit, then do we also record the entry for interest payment? So this is something I would say it's a discretional. It means if that defined in your fund operating agreement, or maybe let's say an LP agreement, then we also charge interest payment at a standard rate to the means this onshore feeder fund can charge interest payment to the offshore fund. The reason is under both the funds we have a different investor, guys, right? Taxable investors, it could be different, and the tax exempted investors, it could be different. So why they'll offer some favor to each other? Did you get this? So standard interest payment also, it can be up, means interest rate, it can be applied. It could be 5%, 6%, 7%, 10%. Then we'll have to also adjust interest payment as well. And when, let's say, when you reverse this, let's assume it in this particular context, we don't have any interest payment. So we'll directly, and let's say this amount was received only for 1 month. So after 1 month, you can reverse this particular transaction. So basically cash, whatever it was disbursed, so receivable to cash received, and this particular transaction will settled actually, and this right payable to affiliate entity, which is debit 4,000 to cash disbursement to the affiliate entity, again credit just 4K. So this is how your accounting works. So I would request you to note down this as well. Same, if your question would be, what if, sir, if we ask master to process the balance, then you can ask master to process the balance, then you don't need to pay the interest payment at all, because if the master has any balance pending in the master book, it could be your balance as well, right? Because master, which is representing the balances from both the entities, right? It's 50-50%. So master has received 50%, 50% from the this fund and 50% from the this fund, right?
Right side two entries are in the book of taxable feeder. Right side two entries are in the books of taxable feeder, like this cash received to receive affiliate entity.
Cash. Yeah. So what is your question? I mean, I lost.
This the first entry, cash received account to receivable. This is in the books of taxable feeder.
Hey, whether it is a taxable or exempted, that's fine. See, your accounting entries like remain, I mean, same. See, even the even taxable can also, lend the money to the, it's kind of a lending and borrowing, transaction. So this guy is lending and this one is, borrowing to just book the expenses or manage the expenses for a time being. So your taxable status, that doesn't really matter in this particular context. It's just like you're looking for a fund and someone is ready to pay you. That's all. But if you apply, cash payment with the bank will charge interest payment. So same here also can, the other feeder entities can offer you as a loan amount to manage your expenses or liquidity. All right. So please note down this one. And same, if you have, let's say, if any fund manager has a multiple series and asset classes, we follow the same accounting treatment. You can just replicate this one. Even if it is a norm, in case of, let's say, normal funds, let's say if any fund manager has a multiple funds like A, B, C, D, and if A and B funds, let's say if they're facing any liquidity issue, they can borrow and lend money from each other. And this is what we'll call it as internal transfers. If you have worked in recon process, I'm sure you would have seen lots of internal transfers from one account to another, maybe from, let's say, your Goldman Sachs account to Wells Fargo, or Wells Fargo to GS to any different accounts. All right. Any question, guys? Come on. If no question, I need an acknowledgement that, yeah, we don't have any questions. So we can jump on other things. We have lots of things, as I said. Okay, I'm assuming that you don't have any questions. So I would request you to note down this one quick. And I'll just start with the introductory part of corporate action today. Have you noted down, guys?
Yes, Yuvraj.
At least take a screenshot This is not a shareable link. It's kind of a board actually. So, okay. So another topic is oops, what happened with this? Scroll to content. But what is this? I don't know. Anyways, I don't require this now anymore. But yeah. So now we'll jump on corporate action part. What is corporate actions as we discussed? Because those were the key accounting terms which I wanted to explain. So I have explained it. If you still have any questions, you can reach out to me or maybe Sabra or anyone from the GMT Academy. They'll help you definitely on that part. So let me share my screen now. Is it visible, guys? Corporate action part.
Yes, Yuvraj.
All right. So if I ask question to you, means anyone from the audiences, you can try. What do you know about corporate action? Come on. What do you know about corporate action?
Corporate action is a decision taken by the board of directors of a public limited company which impacts
Wait,
the.
wait. Sorry to know this. Why not private companies? Why not startup companies? Why can't they take a decisions on their, you know, shareholding investment? Why only
Because
public?
they are not public companies. They don't issue shares and debentures.
No, they issue it. Startup companies can also issue debentures. They can also issue, equities.
No, that's why I said public limited companies.
So my point is, see, public it means the listed companies, right? They're listed on a
Yeah,
stock
yeah,
exchange.
yeah.
But what if, let's say, my company is not listed on a stock exchange, but still the people, let's say around 500 people, they have invested in my company through equity or maybe through, let's say, bonds. And if I schedule a, let's say, AGM or maybe announce dividends and all, so as per your logic, as a private limited company, will not call it that event as a corporate action. Will only call it, corporate action as like, when public company announcing events, will only call it that event as a corporate action event. Am I right? Yes, no. Sagar. So in short, any company, see, this is what, uh, forget that logic. If any company going forward, just try to, remember this one. If any company, it could be private limited company or public limited company, if that company announce, any action, it could be any action, let's say fundraising action, maybe restructuring of securities action, IPO action, annual general meeting action. So all that actions we can treat as a corporate actions, irrespective of your public limited or private limited. That doesn't matter at all, because every company need a finance or funding. Every company will have different investors on a company's cap table, means capital table. Even private equity fund also announce corporate action. Even hedge fund also announce corporate actions. Corporate action is nothing but, guys, it's just an action. It could be, let's say, subscription event. Basically, in a in a hedge fund, your subscription activity, they call it as a corporate action. Basically, even subscription activity fund will call it as a corporate action. In a private equity, partner transfer or partner, let's say, termination or fund termination action, will call it as a corporate action. So corporate action, it means it could be any activity. It could be any means it could be any activity. So that activity we can call it as a corporate actions. Are you clear on this now? Any means any action, guys. Now,
Yeah.
if someone asks, so don't say only public limited company, say it any company, if that company announce any corporate actions or event, it could be merger, acquisition, tender offer, buyback, subscription offer, or any offer means any offer. So that activities we can call it as a corporate action. All right. Now, so what are the key corporate actions and how they impact on NAV? See,
Uh,
yeah, go ahead.
Corporate action will definitely, in most cases, it will cause the holding of the child security to increase, and a new security will come into custody. So the value and the price of that, because a security is an asset for a fund. So the any child security of a corporate action will cause the assets to rise. So that's how NAV will change.
How? Okay, do one thing after the class. You just take any dummy example where, let's say, the portfolio size of investment is, let's say, 1 lakh, and the NAV was, or NAV is 100 rupees per share. Just you can divide, means 1 lakh divided by 100, you will get the total number of outstanding units, and that, let's say, 1 lakh was invested in Wipro Securities, and Wipro announced stock split. Now let's say announced dividend of 10% of their, let's say, maybe market value. We don't compare dividend with the market value basically in terms of percentage. We just compare with the book value. But yeah, anyways, just compare it. Let's say share price, it was 500 for per shares, and dividend received is like 50 rupees for per shares. So take this example, prepare a use case in Excel sheet and submit that out. So I want to see the impact of this dividend on NAV. Or another example, which I would request you to prepare it for a stock split. You have a stock split where the ratio is like, for one parent security, you have, let's say, received 9, the new security. So it means the ratio of the stock split, it was 10:1. So it means you have received 10 new securities for one old security.
I
So
think
impact, yeah.
so far as a stock split is concerned, I think NAV will remain unchanged.
Mm-hmm.
With respect to other corporate actions, I think, uh, I mean, because in a stock split, the parent security gets replaced, therefore the NAV will remain unchanged. But wherever the parent security remains in existence and a child security is also added, that in those cases the NAV will change.
Hello, Shivraj.
Yeah.
Yeah, Shivraj. Actually, I mean that I understood your question, but I did not write down I mean that numerical part. I mean that whatever the number, what you.
You can take any numbers. You
Yes,
don't go
yes, but
for any numbers. That's
yeah,
fine.
yeah, yeah.
So my
But
only point is, Sagar said there will impact on NAV and all. So one example you can refer it for a dividends, how dividends will impact on NAV of the fund. And second one is stock split, how stock split will impact on NAV of the fund. So he answered for like the stock split, that NAV will remain unchanged in terms of stock split. But what about dividend?
no,
Yeah, it will
Dividend
impact.
will also not impact, sir, because when a dividend is issued, market price of that share will go down, but again the market forces will lead to increase, or that also will not impact again.
yeah, actually, Shivraj, as per my understanding, it will impact on the NAV value. In the case of a stock split, okay, the NAV per share, I think it will be the decreases, but the total market value of the fund remain the same. Why? The because in this case, you know
Sahil,
that
Sahil,
stock.
Sahil, Sahil. Wait. See, if you feel that NAV will change, that's fine.
Yeah,
I know that your end outcome and all, but just
yeah.
prepare the case in Excel sheet and submit that. I just want to say it. What is
Okay.
your understanding in terms of that?
Okay. So can you just give me the that numbers, because I didn't
Take
write down.
any number. Take any numbers I said. See, the stock split ratio is 10:1. It means for every one existing share, you will receive 9 new shares.
Okay. Okay. I'm taking any number. Okay. I'm taking
Um,
any of the number.
you can take any number. That's fine. And portfolio size was, as I said, 1 lakh divided by 100. So you will get the number of outstanding units. So 100, which is NAV per share, and 1 lakh, which is the total value of your portfolio. Right.
Okay.
So I just need a comparison. Pre-corporate action, NAV was 100, and post-corporate action, NAV was 50, because the total number of shares which has been changed from this number to that number. I just want to see the comparison, how it will change.
Yeah. Sure. Sure.
Did you get this
Yeah,
now?
Yeah. I understood.
Okay, because I
yeah.
want.
Hi, Shiv.
Yeah, go ahead, please. Yeah.
Yeah, Shivraj, from as far as like regarding to the like stock split now, like there wouldn't be any like impact on the NAV, because basically it's, like stock split will be happen on the face value. Just supposingly if the face value is at 10, then if the company announces the 1:1, then the face value will be get adjusted. So just supposingly like if I am having the 100 shares, then I will get the 200, like 100 more shares. But what will happen? The
Got
price
it.
will be
Got
get adjusted.
I got it. I just want whether it will impact or not. Answer
Yeah,
me.
no, it won't. No, it will impact. But the dividend will be impacted because the fund is like on the ex date. It's holding the like position. The fund is holding the position.
Okay, to
So
answer
will
the question, like no impact. What if when company announced corporate action and in the overnight some trading happened, because corporate action event, it was, let's say, promising for investors, and suddenly the price, let's say, increased or ramp up in the overnight trade. In a pre-open market also we have seen the same things, and when the market opened, the trade open at a different price, and that open price basically we refer for uh, the adjustment of corporate actions. Then in that case, how will you justify it?
Shivraj,
sorry.
Shivraj, I want to say something. As per my understanding, for a stock split, that once the corporate actions will be announced in the case of a stock split, okay, so it will impact on the NAV value, because suppose, let us example. I am taking one example. I just set one example. Okay, not in the deeply, but suppose if the before NAV, okay, if the before NAV, the split was $50 per share. Okay, originally it was the something like the NAV was there $50 per share, but it would become, that after announce the corporate action, stock split, so it will suppose like
Sahil, your means answer is on the screen. See this very carefully. This is for everyone, guys.
just go back, man. Just, yeah. $50. Yeah, that would be, I wanted to say, Shivraj, because for me also, yeah, exactly, I'm telling, because for me also, I just got the same answer, because it would become, that after the stock split, $25. Okay, so $25 per share after the split. However, an investor who previously owned one share now owns two shares. Okay, and the total value remains same, $50 exactly. And originally it was for me, the $50. Okay, and for me also, the
कहना
answer,
क्या चाहते हो भैया, वो तो बताओ.
मैं मैं ये बताना चाहता हूँ कि अगर कॉर्पोरेट एक्शन से पहले, अगर मेरा नैप पर शेयर मेरा मतलब मैंने जो एग्जांपल जो मैंने सेट किया है $50 पर शेयर था, ठीक है ना, और
No,
एक बार
that will
स्टॉक
not work that way. Sahil, wait a minute. See, while evaluating, the impact of any actions on in a portfolio, we just compare two things. One is before corporate actions, what was the value, means NAV for per shares of my fund, and post corporate action, what is the NAV of my NAV means NAV for per shares of my portfolio. Simple. If let's say pre corporate action NAV was 100 and post corporate action, let's say stock split, NAV is 50, so it means that event basically impacted your portfolio, so the difference will have to adjust it as a unrealized realized or basically realized gain and loss. So that's what it is important. It's not something that let's say value will change or value it will not change and all. So the basic is why we want to evaluate pre-corporate action and post-corporate action difference or price movement is because if you see any price movement, or sorry, if you see any price change because of corporate actions, and if you see any change in price, basically that will impact on your portfolio's value. So that value will have to adjust it somewhere because your entire portfolio value, we measure or we evaluate through MTA, mark to market. So that's when your corporate actions evaluation is come into picture. So your logic, whatever logic is your logic, but anyways, from the fund accounting perspective, we just evaluate pre-corporate action and post-corporate action impact. Your stock split impact, if you see, pre-corporate action per share value is 100 and post-corporate action per share value is 50.
Yes.
Post-corporate action, you will have a 2 shares. So it means there is no change in value. Then how will you see the change on NAV per shares of a fund? Then? Point is here very simple is, let's say due to any corporate action, it could be any corporate action, if you see any positive change or negative change in your investments value, right? So it means your NAV for per share will also impact it.
Yes, but Shivraj, but total fund value remain, it will be the same, right? In the case of a stock split.
Yeah, why it will change?
So my answer was right.
Yeah, but
And
there
I
are
am
lots of ifs and buts, guys. Even Sagar to your answer, and someone also answered it. I haven't seen the name of that person. You can see lots of ifs and buts because it's a game of demand and supply as well. Sometime what happened in the overnight, you can see lots of requests received to the broker. So broker, they just clear out few stocks, and if you see due to the demand, high demand of the securities in the market, price will appreciate instead of, let's say, correction. That also happened because anyways for a corporate actions, once the market is open, so we refer the price of 915 price for Indian market. When the market is open, we refer that price to compare. But technically, if you ask me, yes, your stock split that won't impact on your portfolio value. So it means there won't be any impact on NAV per share. As simple as that. Same applies for a stock reverse split as well.
Yeah.
But anyway, we'll have a couple of examples in details to see.
One thing that I want to ask you is that first of all, in a stock split, there will not be any impact because the value remains the same.
Yeah.
Okay. But in case of a corporate action where the parent security is as it is, like in the case of a right distribution or a bonus issue,
Yeah.
the child security gets added to the balance sheet of the fund.
Hmm.
So, what is the effect on the liability side? What is the second effect of that?
There won't be any impact on the funds, liability side, because for a funds, it's not a liability, right? For a funds, it's investments. Because
No, but
when it's a see, basically when you invest in a right distribution event, so it means fund will have to process the payment, right? So
Mhm.
you're actually buying the new securities. It's not something that you're creating your liabilities. Understand this point as well.
Okay, okay.
Any
So,
company has, let's say, has announced any right distribution event for XYZ price, you are paying price from your pocket. So it's an investment.
mhm. So securities will increase and cash will reduce.
Yeah, post investment, basically, we will have to average out your security prices. Maybe your parent security price, which is at 100, and right distribution you have purchased at 90, right? 100 plus 90 divided by 2. So you will have an average price. So that average price, it will apply to all the securities which are available in your portfolio. Averaging will happen then after that. Your broker will do it, and security prices will correct in market as well. You don't need to do anything. You just need to follow the broker. All right. So we'll have, means tomorrow's full-fledged session on corporate action, impact, and everything.
Shiraz, I have one more question.
Yeah.
If suppose the interviewer will ask something like question, I mean that same example just I'm taking also for a stock split or that share buyback or any types of corporate action or like reverse stock split I'm taking. So I mean whenever interviewer is asking like whenever company is announcing reverse stock split or a stock split, so what will be the impact on the NAV? So I mean, do I need to explain something like with example or directly I can?
Don't try to teach to the interviewer. Okay, explain it means try to explain. Try to tell them what you means. What is your understanding about it? Because most of the cases, what happen, like we try to teach them. Look, this happened. No, just keep it very simple. Look, if any action, let's say due to that action, if my portfolio value change, so it means there would be change on an NAV, change on NAV for per share as well. For example, let's say bankruptcy events or redemption events, liquidation events. In that case, what happened? Company deletes the securities because of bankruptcy and all. So it means whatever value that I had invested, that now it's become zero. So I'll have to remove that investment from my portfolio as well. Correct. So in that case, you can see negative impact of that actions on my portfolio. Did you get this?
Correct. Yes.
So in that, you should explain it and keep it very simple. And same for, let's say, reverse split. Reverse split, it means it's just the movement of securities where companies want to change the number of shares from 1 to 2, maybe from 1 to 10. The reason it could be different, we'll discuss that in details. We have lots of things to discuss in details, like why stock split, what is stock split, how it works, how price reflect in the market. We have everything. We'll discuss that in detail.
One small doubt also, Shivraj. Just I'm not going to deeply in the reverse stock split, but generally because recently I attended one interview, so that's why I just explained in the front of interviewer. I mean that he was just asked me that what if I mean that company will announce that reverse stock split. So what will be the impact on the NAV? So I said, yeah. I mean that this can be result in an increase in the NAV per share. Why? Because the reverse stock split reduces the number of outstanding shares while increases the share price proportionally.
But don't
sorry.
see that won't impact on NAV per person. Don't worry about it. I was also same person a few years back in a BNY interview. Same question,
Okay.
they asked, and I said same thing. So initially, that understanding. It's not something that someone taught in academics, and also we are new to this. So that happened. But eventually, your stock split, reverse split, bonus issues, stock dividend, that won't affect your NAV per shares. That's fine.
Second thing, this file that you're showing us right now, can you share that file?
Yeah, this can be shared. It's a shareable. I'll share
Yes.
it. After the session, I would like to share it because we have just started it. So tomorrow, again, we'll have a detailed discussion on each means top events that I would like to cover. Not all, because there are hundreds of events. So that doesn't make any sense to cover it all. But top events I would like to first discuss, where you may expect questions, as well as in a day-to-day operation also you can see those events for a processing or booking or adjustment or for even settlement as well. So we'll see that, and then I'll share this document with you. You can access it. But anyways, this document is already saved in LMS as well. If you have access of it, you can access from there.
Okay, Shivraj.
And who want to learn other lots of things, we have shared link in the group for IFRS and GAAP. You guys can go through it. All right, it is something means additional things that we have done for you. All right.
Shivraj, just one last question.
Yeah, sir. Go ahead. Yes.
Bond.
Huh?
If we purchase a municipal bond and we put into automated accounting system, how it will impact the NAV?
Automated, it means, what do you mean? Accrued interest calculation part? Is it so?
Yeah.
NAV will increase basically. Your accruals, when you book the accrued income, which is a part of your assets, current assets will increase. So it means you can see positive impact of interest payment on NAV, net assets value of a fund, and even NAV per share as well.
So basically, if the asset side or liability side value change, there will be a NAV impact.
Exactly. This is the, I mean, basic thing. Let's say your expenses increase, NAV will change. Income increase, NAV will change. The unrealized gain, if you see change in asset value, NAV will change for per shares. If you see unrealized, let's say loss, again, your total, NAV for per share, it will reduce. So this is something basic. If you try to understand the basic, then you can relate or link with the other means advanced transactions as well.
Or something is like coming and going out from PNL, then also it will affect the NAV, right?
Yes. And then one last, things I just want to tell you guys. If any corporate action, if offers, let's say, huge benefits to you, right, as a shareholders, why companies will announce this action for you then? If I see the benefit.
Because shareholders have to be rewarded because they invested in the company in the
No.
form of profit.
See, as a profit, it means the dividend is enough. But why we have other lots of events like, your merger, acquisition, your stock split, reverse split, this and that. Why? Bonus.
Stock split is done basically to regulate the price of the security
Hmm.
and make it more affordable to
I don't want to
smaller
make it more
investors.
affordable then.
And stock merger or spin-off is basically the restructuring of a company.
So that's what my point is. I don't want to make it more affordable to the retail investor. Even if the price of my shares is 10 lakhs in the market, which is fine. Go and check the price of Warren Buffett's, company, class A.
Even MRF is a good example.
In that case, then your regulatory norms, it will not apply. So basically, corporate action is just, events that keeps you busy as an investor and make you fool. As in, there is no gain and no pain. It's just like, look, stock split, I'll receive number of shares. But what will really matter, guys? There won't be any change in your portfolio value. Your question would be, look, if I receive dividend, then it's my benefit, right? Even if company, let's say, don't, distribute dividend, and if they reinvest, you can see the appreciation in stock price. Then where is the profit, the extra gain? You will not see any extra gain. वो होता है ना कि look, we are doing some activities, office में भी fun Friday होता है ना. It actually doesn't help to manage your workflow. It's just like, okay, let's enjoy the fun. We are same kind of the events, like the board members, they schedule for you guys as investors, but you will not see any impact as such, positive impact on your portfolio or investments. अरे सवाल सिंपल सा यार, अगर ज्यादा प्रॉफिट ही उस इवेंट्स में छुपा है तो कंपनी खुद के लिए पहले करेगी ना वो चीज. Why they'll offer to the investors?
But investors are also owners of the company.
That's fine then.
So, whatever gains the company has made, they have a right to have a share in.
By schedule, let's say, stock split every year, what will really change? Number of shares will only change, because actually everything is based on company's business, not something on corporate actions. Actions are just action. actions, that won't really impact on your portfolio value. What if, let's say XYZ company keep announcing stock split, but in terms of performance, they are like worst? What will really, change? Just think for a while.
But if there is a action like, say, exchange offer, where debt bond holders are given equity securities,
Hmm.
so that action will benefit the share those investors, because then they will have voting rights.
See, voting rights, you're also investing in stock market, right? Maybe at a maybe smaller level. How many times you have exercised your votes? I'm also investing. Akila is just smiling. How many times you have exercised your votes? And what you did with that, you tell me. This voting, see guys, first understand it. The company management, they have holded almost 51%, votes. If your vote has a value like nota, to vote dalo ya mat dalo, we don't care at all. Already they are holding 50% votes, they'll take all the decisions. Every quarter we just received emails from them, hey, the voting has been scheduled, can you just vote it? I don't vote. But what really matters? It's a trap, actually. I'll discuss that openly maybe in my podcast. I'm planning that open podcast at a very mass level. So maybe you can enjoy that session. It would be very funny. And again, means I would it would be like very different session, like I'm going to decode the IPO, different events, how they just trap us and all. Anyways, we'll discuss maybe that part as well in any other session. So thank you guys. If you don't have any questions, so
Yeah.
I'll close this conversation for today. We'll
Have
connect.
you stopped the recording?
Let me do this.